Welcome to the Be Smart podcast, how not to be an idiot with your money. And I'm pretty sure we're going to discuss at least one way not to be an idiot with your money, because in today's episode, we're going to talk a little bit about the SEC's kind of unusual move after the launch of a private credit ETF that faces, quote, significant outstanding issues. But Jared, first things first, it's good to see you in your home. I know you had a little scare in South Carolina this weekend. Can you tell listeners and viewers what happened?
Yeah, actually, I wasn't here. I was flying back from Wichita. But basically, I live in a development. It's called Prince George, and there's a lot of woods. There's woods all around our house, and every once in a while they do a controlled burn to reduce the fire risk. And the controlled burn turned into an uncontrolled burn, and it happened to be a windy day, and the whole neighborhood caught fire, and it was crazy. So we were about a mile away from getting burned up. Like, it was about a mile away. Actually, there was only one house in the neighborhood that got damaged. So we were super lucky.
Did they lose their entire house, or was just some damage?
No, just some damage. Yeah.
Whew, that's terrifying. Don't like that at all.
Nope.
Nope. No, exactly. Nope. Well, it's good that it wasn't worse than it could have been. So let's jump into these market headlines first. From the Wall Street Journal, crypto prices jump after Trump announces 5 tokens for strategic reserve. These include Bitcoin, Ether, Solana, Ripple-linked XRP, and Cardano. As Trump said on Truth Social, a U.S. crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration. I will make sure the U.S. is the crypto capital of the world. Shortly after he said this, Bitcoin rose 9%, Ether 11%, Solana 20%, XRP 30%, and Cardano nearly 60%. Have you made any sense of this crypto reserve since we last talked about it? Also, I guess it's kind of worth noting that Bitcoin dipped below 80K before Trump said all this. Then it pretty much resurrected, as it usually does when Trump talks about it. Now it's back down to, I think, 87-ish.
Yeah, I mean, you have to sort of ask yourself, what is the purpose of a strategic reserve of anything? Like, we have a strategic petroleum reserve, right? And that is we have a bunch of oil. If we go to war, we have oil. I guess that makes sense. But the SPR was used for political purposes. Biden sold it all and use the money for God knows what. And so, that is an example of, the government having a strategic reserve of something that just fails. And the Wall Street Journal about 10 years ago was actually writing that the United States had a strategic raisin reserve. This is actually true. Like, the raisin farmers in California were coerced into donating a certain percentage of their crop into a strategic raisin reserve. Why the hell do we need a strategic raisin reserve? We don't need a raisin reserve, and we don't need a crypto reserve. That doesn't make any sense. You could sort of make the argument that we could have a reserve of Bitcoin where we could someday turn it into cash for whatever reasons. I don't know. But Ripple is a shit coin. Cardano is an even bigger shit coin. Solana is being used for all these meme coin frauds. Basically, the reason Trump and Trump Jr. and Eric Trump picked these 5 cryptos is that they were the ones owned by David Sachs, right? That's why. So it's massive corruption, massive market manipulation. It's really gross. And out of all the things that Trump has done since he's been elected, there's been a mixture of good and bad. This is absolutely the worst.
This next headline, I don't know if we're going to talk too much about it, but it really caught my eye. And there's a reason I picked to go with this one after the crypto headline. From Reuters, the U.S. Treasury Department says it will not enforce anti-money laundering law. So here's the gist of this. On March 2nd, the Treasury Department announced suspension of the March 21 deadline for filing under the Corporate Transparency Act for any domestic companies or U.S. citizens. The Treasury said that it's preparing a proposed rulemaking to narrow the scope of the rule to foreign reporting companies only. So this is a federal law, by the way. So I'm kind of left scratching my head here just a little bit over ignoring the law versus going through kind of the proper protocols to have it changed. Do you have any thoughts on this? Have you seen anything about this, or is this kind of like a nothing burger for you?
I mean, it's not a nothing burger, but I mean, look, we do not live in a financially free country, right? I'll tell you a story. Back in 2014, I invested in a hedge fund that was overseas, right? The amount of money laundering crap I had to go through to invest in this hedge fund was mind-boggling. Just piles and piles of paper. And I had to open what was called an FBAR, a foreign bank account report with FinCEN, the Financial Crimes Enforcement Center, right? So anytime you open a foreign bank account, whether it's a hedge fund or even just a plain vanilla bank account, you have to file an FBAR, right? And if you don't, like, the penalties are criminal, right? So, like, if you're telling me, I didn't hear about this, by the way, but if you're telling me that anti-money laundering laws are being reduced, I'm like, great. Like, because for the most part, it's a giant paperwork drill for, law-abiding people who are not laundering money, and the people who are laundering money are going to get around it anyway.
Yeah, I didn't quite fully understand it, but it was eye-catching, so I wanted to get your thoughts on it. Let's talk some agriculture commodities headlines because you're fresh off your trip from Wichita. What was the name of the conference you went to?
The Leffler Commodity Conference.
I'm going to rattle through like 3 of these really quick, and then we'll go through them. Is that good? So the first one from Bloomberg, U.S. farmers to get first of $30 billion tranche for downturn. Farm income has been under pressure for the last 3 years after crop prices declined, while the cost of seeds, fertilizer, and equipment kept going up. The U.S., known for being a global agriculture powerhouse, is also losing shares in overseas markets and has never imported so much food. Next up, China targets U.S. agriculture over Trump tariff threat. In short, China is preparing countermeasures against fresh U.S. import tariffs, raising the stakes in an escalating trade war between the world's top 2 economies. And finally, gold gains after pullback as Trump tariffs stoke economic fears. Pick your poison on these headlines, although I do kind of want to get your thoughts on gold now that it's back above 2,900 last I saw.
If you don't follow this sort of thing, like, crop prices are really low. So corn actually, so back in September, corn got below $4 a bushel. It recently traded as high as $5. Just in the last week, it's completely melted down. Now it's $4.50. Soybean is around $10 a bushel. Wheat is getting killed. Like, at $4.50 a bushel, corn farmers are not making money. Like, they're not. I have never been a big fan of all the subsidies to farmers. You know what I mean? Like, we don't really allow farmers to go bankrupt in this country. Which, it's a long argument about capitalism and stuff like that, but they should be allowed to fail. But $30 billion for subsidies for farmers. I mean, yes, that does, at least make them break even or profitable, but agriculture is a horror show these days, and the one thing I'll point out is that back when corn was trading around $6 or $6.50 a bushel, these farmers had an opportunity to hedge. They had an opportunity to lock these prices in, and the vast majority of them didn't. They were idiots. And so now, corn is $4.54 and they just, they're stuck.
Any other takeaways from the conference? I saw there was a guy named the Cow Guy, which is kind of a sweet name.
Yeah, so Scott Shellady, he's on TV, he's on RFD TV, which is like the agriculture TV channel. It's kind of like CNBC for commodities. He's probably the most easy to spot guy in the world. Like, he's a huge guy. He wears this cow jacket with like a bow tie and all this stuff. And so you look at him and you're like, who is this guy? And then he opens his mouth and you're like, oh my God, this guy is really, really smart. Like he knows what the hell he's talking about. He's had a long career trading futures here in the United States and overseas. Very smart guy. I got to talk to him for a little bit. So yeah, he's terrific.
All right, I'm going to need subscribers to get in the comments below and try to give me a cool nickname like the cow guy. Apparently Jared's going by Fats Dillian now, so
Fats Dillian.
I'm probably opening myself up to some major pain in the comments, but let's do it. Guys, give me a nickname. I need one. Let's get over to the main topic, fears of a US economy slowdown. To put this in perspective, a choppy February for investors was punctuated by a poor reading on consumer confidence, a soft report on consumer spending, and a sell-off across many of the momentum trades that had defined the market action this year. For the month, the tech-heavy NASDAQ composite fell about 4%, while the S&P 500 and Dow Jones were down 1.4%. What do investors do here, Jared? I mean, a lot of these winners are now being punted. Is this predominantly a growth scare? Is it more so rotation out of these winners? And is now the time maybe to lighten up on stocks?
It's all three. It is a growth scare, it is a rotation, and it is time to lighten up on stocks. And if you're listening to the podcast, this is the most important part of the podcast. So what I've been saying for a while is that if credit ever started to weaken, you wanted to grab some canned peaches and head for the hills. And I've been talking to some credit folks over the last couple of days. I've been getting some intel. The credit markets are starting to weaken, not materially, but they're showing the first signs of weakness really in years, right? And a bunch of things, all the economic data you mentioned. Plus, we got ISM today. ISM was a horror show. You saw the Atlanta Fed Now GDP estimates. That's now negative. Like it is becoming very apparent that we are headed into a slowdown, which is kind of what I've been saying about Trump with regards to Reagan. You know, the similarities are there. You know, Reagan front loaded all the pain in the beginning of his first term, and Trump is doing the same thing. Trump is not commenting on stocks, right? He's not tweeting about stocks. He knows that tariffs are going to make stocks go down, and he's willing to take the pain. So the funny thing is that the stock market is always the last to get the joke. The stock market usually will fall apart last after everything else. Not acting so well today, hasn't acted so well the last week or two. You know, if you're listening to this and you have a portfolio that's loaded up on tech stocks or any stocks, gosh, like I would hedge or sell some or do something.
What about other assets? How are bonds looking to you right now?
Treasury bonds are looking great. Treasury bonds are relentlessly bid the last 2 weeks. Relentlessly bid. I think you could see some numbers in yields that people are not expecting at all. Like I want to say 10-year notes are trading around 410, 415 right now. You could see 3% 10-year notes at the end of this. Like you're gonna see the Treasury bond market rally a lot.
I know you just wrote an article about Doge and bonds on Reason recently, and I'll link that below, but I want to look at this tweet you wrote because it kind of cracked me up. You're responding to this headline, "The bond market isn't buying what Elon Musk's Doge is selling." And you're right. Cripes bonds were limit up today and yields are down like 40 bip in the last month. Not sure what kind of spin this is, but it's crap. The reason I crack up is because Cripes reminds me of Dumb and Dumber. I don't know if you've seen that.
Yeah, of course.
When Jim Carrey's character accidentally locks his wallet in the news box. And it's so funny because the camera is like in the news box. So it's like looking through the glass at him and you just hear a muffled cripes. That's just the whole reaction. So I don't know. I lost it at that.
That was a Bloomberg headline. And, you know, Bloomberg is doing Bloomberg things. Like they definitely have a spin, right? That headline was actually the opposite of what is happening in real life. Like Doge, in addition to interest rates going down because of a potential slowdown, interest rates are also going down because we're cutting government spending. And at the time that they tweeted that was, we had like 50 billion in spending cuts. We have more now. So that's also a part of it.
Before we go to the week ahead, let's talk about this private credit ETF. So this also from Bloomberg, State Street Apollo to rename scrutinized private debt ETF. A much anticipated private credit ETF, ticker is PRIV, from Wall Street giants State Street and Apollo Global Management said it will change its name. Responding to a Thursday letter from the SEC, the ETF tried to ease concerns from the regulator around liquidity, the fund's name, and its ability to comply with valuation rules. The SEC has said that it is misleading to have Apollo's name on the ETF, given Apollo does not have an obligation to sell any debt to the fund, and it's not an advisor or sponsor. What do you make of this, specifically the idea of a private credit ETF? And I also saw you tweeted about this with a nice Homer Simpson, the end is near gif.
The name isn't really the issue for this ETF. I mean, call it whatever you want. Like it's, there, like you said, like there's no liquidity, there's no transparency. Like you can't have an ETF on an underlying asset that you can't trade. Like I don't understand it. So yeah, I don't know. This is, I don't even know what to say. I don't.
Me neither. I mean, I just, the reason I brought it up is because it was a little weird that the SEC kind of waited until after this ETF had launched. I believe it was last Thursday before they were like, no, you can't call it that. So that's a little irregular, no?
Usually if they have a problem with the name, it gets figured out before the launch.
Let's get over to the week ahead. The February jobs report on Friday is expected to show hiring rose modestly last month, while the unemployment rate held steady at 4%. Earnings reports from the likes of Target, Costco, and Kroger will offer more color on the state of the U.S. consumer. And on the policy front, new tariffs on Canada, Mexico, and China are all set to take effect on Tuesday, March 4. I think that's still on. Who knows? Any of these you want to look at?
I'm not super interested in payrolls. Like I'm actually more interested. I mean, we're not going to have CPI for a couple of weeks, but the inflation data is more interesting. You're familiar with Trueflation, right?
Yes.
Okay, so Trueflation, if you pull up the Trueflation numbers, inflation has gone down to like 1.3%. Like the Trueflation numbers have crashed. Like we are experiencing deflationary forces. Inflation is not the concern, right? So if I were to bet, I would say the payroll number is going to be a little weaker, which is going to be good for bonds. But I think the overall concern is that inflation is going to be coming down, and you still have a Fed that is making a lot of noise about the risk to inflation, right? Which is rapidly disappearing. I think we're going to get a bunch of rate cuts this year. I do. I think rates are like 4.5 right now. I bet you we get 6 rate cuts this year, at least. So, which is not what I was saying a couple of months ago. Like, I've totally changed my tune on this.
That does it for this week's episode. Jared, you got a birthday coming up this week. Happy birthday in advance. Expect something in the mail from me. It's taking its sweet time getting there, but it should be there about the time this podcast goes out. So
you send me a present?
Yeah, we talked about it before. It's been like backed up getting there. I don't know what the deal is.
All right. Cool. Thank you.
Yeah. All right. Thank you, everyone. Talk to you here soon, Jared. Bye.